We are keeping an eye on impact to retail this morning. Shares of Levi are falling under pressure, down 7% in the pre-market after releasing its quarterly report card after the close on Thursday. The well-known jeans maker cut its revenue growth forecast to between 1.5% to 2.5% from its previously forecasted 3%. The company also lowered its earnings per share, expecting it to be between $1.10 to $1.20 from its earlier prediction between $1.30 to $1.40. As we know, it reported a loss of $1.6 million. So certainly showing some weakness with regard to the consumer. And I mean, we've heard that play out in terms of where the consumer is in its spending on experiences versus goods. And the company also talking about planning some price reductions as well, Seana.
Yeah, exactly. We heard it from Ben Laidler earlier in the hour saying that people simply are not spending on jeans or using their money elsewhere. We have certainly seen that trend where consumers are favoring experiences over some of the retail buying activity that we certainly did see take place during the pandemic. I think promotional activity, the expectation there for increased promotional activity in the short term because of these disappointing results is one of the big reasons why we are seeing some of that pressure on the stock today, given the cut from on guidance that we heard from Levi's yesterday. Pressure in the U.S. wholesale business, certainly something that has been weighing on the company, weighing on its results for the last several months. Macro pressures there are partly to blame. We mentioned the fact that inflation is still very persistent, still very sticky. People are spending more money in almost every other aspect of their lives, are being forced to reduce their budgets, to cut their spending on certain items. And we certainly are seeing that reflected across the consumer discretionary sector. Many of Levi's competitors out there have seen these types of trends over the last couple of months.
Yeah, and like you mentioned, Ben, speaking earlier about just consumer trends in general, and like the trend to spend on experiences versus goods. Like, you don't need the jeans so much now. People are back in office more, so they're buying the blazers and, I don't know, slacks, I guess. So that's, certainly you're seeing that just shift away from the more of the leisure type of activity, and even a well-known brand like Levi would suffer as a result. And, so they're expecting to see price cuts, promotional pricing on things like its 502, 5112 jeans. I don't even know. Like, I haven't bought a pair of Levi's in I don't know how long. So I was surprised that I shouldn't say any demand because people love them. We know Sazi loves them.
People do love them, but I also think it's a sign of the times what we're seeing in terms of investor behavior as well. Bank of America was out with a recent note here saying that the list of the most shorted S&P stocks are dominated by consumer discretionary names. Lots of expectations out there that this group is going to underperform, at least in the short term. And speaking of the short term, Wells Fargo also weighing in on these results here from Levi's, calling it a very tough quarter here for the company, and they expect those headwinds, those challenges to persist here, at least in the short term, saying that this near-term setup here for Levi's looks challenging. We're seeing that reflected in the stock action today, with the stock off just about 8% here ahead of the opening bell.